I think there's going to be a reckoning day for the stock market where investors are all of a sudden going to be like, wait, we thought low rates or no more hikes was good, but now we're in a recession and we look to the Fed to start lowering, and the Fed turns back to us and says, hey guys, inflation's still stuck at 4%. We can't lower and create a 20% inflation point. So you have to just deal with this recession. And if you look back historically, the market in the last 20 years or so, we've never had that situation where the Fed didn't come to the rescue. And I think that's going to be the reckoning day where we get in a recession, things just continue to get slowly worse and worse, and the Fed's not able to stimulate like they used to.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his thoughts about the recent mass panic triggers $1 trillion crypto price crash and short squeeze warning, as FTX's FTT goes into freefall, dragging down other cryptos. The drama between FTX and Binance have worried the Bitcoin and crypto community, who fear the clash will spill over to the wider market. Fears of contagion from the public spat between Binance and FTX have gripped the cryptocurrency market, resulting in an aggressive sell-off in FTX's token, FTT, as well as Solana, which is one of the largest holdings of FTX's principal trading firm Alameda Research. This continues to unnerve traders in a space so driven by sentiment. Before listening to him, please ensure to smash the like button and subscribe to the channel.
What are you expecting this morning out of the markets when that CPI prints?
The CPI, it's coming at a point when the markets are already getting very nervous, right? And I think this is coming from crypto, which is super interesting, right? Because usually crypto is an afterthought to stock market, Forex, and all these other things. But you have this kind of issue going on in the crypto markets where FTX is now going under. There could have been mismanagement of funds, of client funds. A lot of this type of thing is making overall nervousness in the investing public. And so when you have a CPI data that could come in hot, it definitely puts a lot of pressure on that number to be in line or better than expected. Because if it's not, if it's hot, you will see more bankruptcies in the crypto markets because the markets will get hammered, and you'll see more exposure of over leveraged, businesses. And you'll also see a stock market where you probably start to see a bigger move down take hold, and probably the June and more recent lows get taken out. In the S&P 500, there's no doubt that if you connect the low from March 2020, right, and you go through here, we broke it, we went back, retested, now we're kind of hovering in no man's land. So the ultimate nature here is if this CPI data comes in hot, we're basically looking at the potential for a bigger move down that takes us all the way down to this 3390, 3380 level, which is that pre-COVID February 2020 high. If it's a little bit less of an issue, there's a chance we could break above this 3900 and maybe head back to this level around 4120. So there's a lot. I feel like there's a lot of people that are just waiting to hear this number, and it's either going to be a massive sell-off or a massive rally. Yesterday, we saw equity markets, the stock market selling off with crypto. So when Bitcoin made a low, the stock market also made a low. But I think part of that also was a mix of people saying, listen, every month we've gotten the CPI, everyone said, oh, it'll be a little bit lower than expected, right? A little bit better. And then every month they're disappointed. So this month they're saying, all right, it's probably going to be worse. And we'll see if that's the right move here.
Let's take a look at Bitcoin. And it sounded like, I've been following you, that your thesis maybe changed a little bit during this past couple of months. Where are you at now? What are you looking for?
Yeah, so as we were consolidating in this channel, so number one, it was a bearish channel, right? So ultimately the move was going to be down, and obviously we started. I was in the camp where we would at least rally to 22.5 here, this pivot high before that dump occurred. The black swan event of FTX definitely didn't allow for that. And then once that hit, I mean, it's just been down, down, down. So the fact that we've broken this low now, to me, tells me, sure, we're going to get some technical bounces, maybe a retrace of this trend line, maybe if we're really lucky, a retrace here. But I still think that you have a 12 to 13,000 high target on this market. And I hate to say it, but I'm leaning more towards a lower target now of maybe sub 10,000. Potentially worst case would be 3,500. I'm hopeful that that doesn't happen, but I think there's so many individual investors and traders now calling for 12 to 13, that it almost makes me think that, as we know, it's either not going to get there or it's going to go lower than that. And then I zone into the 10,000 level because I could see a lot of people putting stops right at 10,000. And it almost makes me think they'll flush it right below 10,000 quickly before a bottom is in. It's always going to go lower. And the reason why it was going to go lower for me was that we haven't seen a recession hit in the US. We haven't seen earnings guidance come down substantially yet. We haven't heard, Apple, for instance. I mean, what's amazing about it, the Apple chart, let's take a look at that one. The Apple chart has been hovering on this trend line right here. We've hit it here, we hit it here, and now we're looking like we're going to break. And for me, I kept on going back to the fact that even though I believe Bitcoin will eventually be that store of safety, that digital gold, in the near term, over the next 6 to 12 months, it's still a risk asset. And so if the stock market, in my book, still has 25% downside on the S&P, where we're down 40, 50%, then to me, I'd be hard pressed to say, oh, well, crypto's going to totally avoid that carnage, right? And so for me, it's kind of like it's always going to go down. It's just a matter of, how long does it take to bottom out? And what's crazy, Greg, is that, regulation was like, no one wanted regulation in the space, at least if you were hardcore crypto. And I kept on saying, guys, we need regulation because we need transparency. As an investor who wants to make money on Bitcoin, I need to know what the heck's going on behind the scenes. I need to know there are rules, there are audits, there are things that publicly traded companies need to do. And everyone's like, oh, that's crazy. That's going to wreck the whole crypto thing. But the bottom line is, we're seeing now that you can't trust individuals when there's no oversight, right? There's just this kind of pushing and blurring of the lines, and you have to get regulation in there. And I honestly think that when we get good regulation, that actually could be the bottom in crypto.
The markets have priced in inflation. They've priced in interest rate risk, but they, like you said, have not priced in recession yet because we can't. At what point do you think we get there to where the markets can start understanding recession risk and start pricing that in?
Yeah, I think it's going to be in the first quarter of 2023. So, we still have seen generally strong jobs numbers. I mean, under the hood, we're seeing a little weakening. I do think inflation data at some point is going to start to ease, right? So we're going to see lower inflation. I think that's going to give a false sense of security to the market. We'll get some sort of rally out of it. But then I do think that you start seeing that weaker economic jobs numbers really start to bite. So, end of year, early 2023. And I think there's going to be a reckoning day for the stock market where investors are all of a sudden going to be like, wait, we thought low rates or no more hikes was good, but now we're in a recession and we look to the Fed to start lowering, and the Fed turns back to us and says, hey guys, inflation's still stuck at 4%. We can't lower and create a 20% inflation point. So you have to just deal with this recession. And if you look back historically, the market in the last 20 years or so, we've never had that situation where the Fed didn't come to the rescue. And I think that's going to be the reckoning day where we get in a recession, things just continue to get slowly worse and worse, and the Fed's not able to stimulate like they used to. The Bitcoin chart was fascinating because I just a couple days ago, I did an interview and I talked about that exact thing. And what was amazing about it is if you look at the time on your chart, right? So in 2018, that consolidation, that quiet period started in June. And when it broke down? In November. Yeah. And here's same thing, June, November, and there's your breakdown. And this was before the breakdown started. And I actually kind of discovered that. I was like, let's look at when this started. I was like, oh my goodness. And then it was like, oh, November. And I was like, oh my goodness, this is the same almost to the day, period of the breakdowns, like June to November, and then the flush occurred. And I mean, that is kind of freaky how that does work out like that. So it puts us, if I'm correct, that puts us around 10,000. Right. We were right around 20 and we go to 10 and, it's, I mean, again, just like me, is that there's no perfect, magic sauce, right? There's no guarantees that we're exact, but history tends to rhyme, if not repeat, because human nature doesn't change, right? Greed and fear. And so, as people are watching this interview, I think it's important to recognize that let history guide you. And doesn't mean go all in at these levels, but you start nibbling around the levels, and this way it gives you opportunities to add if it's not quite the exact point. And I do think people have to remember that bear markets give you the best opportunities in investing, right? That's where you get things at discounts. So it's, people say, oh, bear markets stink. Well, yeah, if you're a long-term investor, it's no fun. But again, if you're someone who's looking to accumulate good quality, this is the market to do it in. it'll take us 2 to 3 years to get back there at least. I think it's going to take longer because I think all the past cycles that the Fed was printing money, right? So we're not going to have that at least for the first, I'm guessing for the first year or two. I think if things get bad enough, the Fed will start printing, which then could trigger that next move up. But I think it's going to be a little bit longer of a bear cycle than we're used to because of the lack of the Fed. And I also think that there's going to be a lot of investors that get burned, and these FTX type scenarios, Terra Luna, there's going to be people that say, hey, listen, I bought in at 55, 60,000 and I exited at 12 or 15,000 because I was panicking. I don't trust this to go back in until a bull market comes along that makes them so greedy that they finally jump back in. Case in point, COVID brought back a lot of investors in the stock market that hadn't been involved in years because they got burned in other periods.
Yeah, and you feel kind of the same for traditional markets as well, a couple of years before potentially returning to all-time highs?
I'm actually in the camp that the S&P doesn't see a new all-time high for about 10 years at least.
Wow.
And the thesis there is that we're now in a period where you're not going to get the same Fed accommodation that we've had in the past. And we pulled forward so much of the gains. In fact, let me show this last chart. This is kind of what I see as the future for the US markets. And it's kind of a crappy future, but again, opportunities. There's lots of bull markets within here. But if you look at the Brazilian market and we go to the weekly chart, this run here from 2002 to 2008 is, look at the vertical nature of that and compare it to what we've seen in the US markets from 2009 to where we are now, right? So time period's almost the same, but it was pulled, so much was pulled forward in this move. And look at the Brazilian markets. We've been kind of sideways chop for now, 15 years, basically, for 14 years. So I think it'll be a little sooner for the US markets, but I think investors have to realize that the Fed pulled forward so much demand and there was so much upside in valuation. Like, look at the tech sector in the .com era, and it took 10 years for the NASDAQ, I think, or maybe more than that, to get back to all-time highs. So I think we just have to be prepared. But remember, inside of those whips, there were epically big 50% moves. So there's bull markets within longer-term consolidation.